Todd Rosenbluth, people are looking for a tough year for bonds in 2014. So what characteristics should people be looking for in a fixed income ETF?
Yeah, so as you'd expect, as bond rates move higher, then bond prices and bond ETFs can move lower. But you need to be aware of the duration characteristics of your portfolio. So not all bonds are going to move the same depending upon the maturity of the bonds, depending upon the characteristics. So we at S&P Capital IQ like ETFs that have less interest rate sensitivity, but also have low expense ratios, also have a little bit above average yield, so you get paid even though you're not taking on as much risk.
And perhaps the best way to own a fixed income instrument that will appreciate as rates rise is to own a floating rate ETF. So one ETF you like is the iShares floating rate ETF. The ticker is FLOT. Tell me about it.
Yeah, so it's exactly as you described it. So it's tied to interest rates. So as rates move higher, then the rates continue to get reset of the bonds that are inside it. So that's a positive. Instead of getting hurt, you can actually benefit as rates move higher. The expense ratio is quite low. That's something we like at S&P Capital IQ. Bid-ask spread is quite tight. And it's performed quite well, as you'd expect, as money has moved in to floating rate bonds during this tumultuous 2013 for bonds, and what could get worse for 2014 once the Fed starts to act.
And the other ETF that you like for 2014 is the SPDR Short-Term High Yield Fund. It's the SJNK. Why do you want your junk near the start of the curve?
So the way you get that is you're going to get the benefit from higher yield as you're in with riskier bonds or speculative grade bonds, so that you get that benefit, but these are shorter term focused securities. So the duration is about 2 or 3 years for this. You get higher yields part of it, and again, the expense ratio quite low. So we like SJNK at S&P Capital IQ.
All right, thanks a lot, Todd.
Thanks, Greg.
Thank you for watching The Street.